Okay, so the next one is core liquidity provider, and I talked a little bit about that in the last term. There is one middleman, and that is the bank. The big banks, they call them the tier one liquidity providers. They provide stocks and currencies or whatever you're trading. They buy it in large volumes. They buy it and sell it at large volumes, and through the ECN network, they distribute it to brokers who we have an account with, and also they distribute it to smaller banks and also high network traders through the ECN network. So when we win money or we lose money, it just goes not to the broker, which some people think, but it goes to the liquidity provider, and they're just exchanging buys and sells and transactions, and money's coming and going. So they're the ones who buy in large volumes, and then they give it out to access to us through ECN networks for us to buy and sell whichever way we're doing it. But this is who we connect with. So the ECN network connects us to the tier one liquidity provider, and that's where our profits come from. It does not come from the broker. Like I said, the brokers take small little commissions per trade, but when we win, when we lose, all the broker and these ECN networks are doing are their computer systems connecting us to the tier one liquidity providers, and they call them liquidity providers because they're buying large and volumes of currencies or stocks or bonds, whatever you're trading. They're buying in large volumes and selling in large volumes. This is when when I said when news release happens and the big banks are driving the price. We don't want to trade when that's why I say tend to stay away from news events, and when there's politics and big banks involved. Us small, we're called retail traders. Our small traders are called retail traders. That's why we don't have enough money to push the market in a big direction, whether it's up or down. We don't do that. The economic events and news events and world events, and as well as the banks, whatever their agenda is, who knows? But like I've been teaching you guys, we don't try to guess or predict which way the market's moving, because the world events and big banks, they control that. All we do is jump on the trend after we see a nice smooth trending pattern happening, and that's how we make money. We jump on the trend, and that's when all the traders, they start analyzing the charts, and when we mark up the charts in a similar pattern, then only then can we, all of us together, we can push the market in a certain direction. Just like I taught you guys, when price is finding support in a certain area, millions of traders like me and you are seeing that, and we tend to buy at the same time. So that's the only time we can push the markets. But the big economic events are these news events that happened and other economic events, and whatever the banks want to do, whether with the coronavirus, banks have lost a lot of money, they've got tighter with loans. Things like that really affect the market, and that's when the big banks come in and they kind of make changes or sell things and buy things. Who knows? But like I said, we're not trying to predict what the banks are doing or how the world economics is going to. We can read economic reports like I've taught you and kind of get an idea of what direction price might go. But like I said, they use the word here, retail providers. Let me see where it is. Yeah, so it says here, the providers buy large volumes from companies that issue these and distribute them in batches to financial institutions who make them directly available to retail investors. So that's who we are. We're retail investors. We're the smaller buyers and sellers. But I just want to clear up the myth that people, As long as you're connected to ECN Network, just know you're connected directly to the Tier 1 liquidity providers. There's no shady business going on. You can feel safe that when you place a trade, that certain rules and regulations are going to be followed. And one thing I'll make a note about is there's a question about that often comes up is about whether your broker is registered or not. So there are registered brokers, and then there's non-registered brokers. So registered brokers, they're better to have because they have to follow more strict guidelines. But the problem with registered brokers is that, if you followed the financial crisis that happened around, I believe it was 2002, 2003, when the housing mortgage crisis happened, well, the banks were giving out loans to people that couldn't afford it, and then the whole system fell apart, and all these people lost their homes because they were over their head when the interest rates went up. They couldn't afford their mortgages, and it was just like this big scam the banks were involved in. But they got away with it because they're big banks, and no one's going to take down the big banks. But anyways, everyone knows about the big mortgage crisis that happened. A lot of people lost their homes. After that happened, the governments put in rules about how much money you can lend a person. And it's in the Forex world, it's called leverage. So when you deposit, say, $100 in your account, you can't actually trade the markets with $100. You can, but normally back in the day, you couldn't, because $100 trading, the big markets is nothing, So what the broker actually does is the broker actually lends you money. So when you sign up for a broker and they tell you what leverage do you want, and we always pick the maximum. Usually the maximum is around 500 leverage. So for every dollar you deposit, they'll allow you to trade 500 times your deposit. So I want you to know that the only reason we can trade with small accounts is because the broker is giving us 500 times our deposit. And I'm going to talk about that a little later. They have systems in place like stop losses and margin calls, and we're going to talk about that in a bit. But there's systems in places with the broker. So when you deposit $100, but you're able to trade 500 times your deposit, and when you start approaching a zero balance, well, the broker has a computerized system that will automatically close your trade so that you limit your losses, or they don't want you to go negative, right? Because if you go negative, technically you owe that money. So there are systems in places that prevent you from going negative, and that's in the first backup system is setting a stop loss. So you have a stop loss, and then a margin call where they automatically close your trades. But back to regulated or registered brokers and non-registered brokers. So if you have a registered broker, the laws prevent them from allowing you to have 500 leverage. They usually are lower, about, some are like 50 to 150. So if you're only able to get 150 leverage from your broker, then that means you have to deposit more money, right? If you want to trade, you need a decent amount of money. And if you don't have a high leverage broker, then that $100 now you have to deposit, $1,000 or $10,000 to trade the same amount. So I hope you understand that. So this is why if you do research, an unregulated broker allows you to have higher leverage. So they let you borrow more money, but they're usually in places, overseas or international brokers that allow that, right? The rules are a little bit less strict. I used to trade with a lot of Australian brokers, and they were registered at the time, and then I'm Canadian and I couldn't, and eventually they actually told me I couldn't be a customer anymore because they became registered, and these big rules came in, and a lot of, some of you may have faced this. Some countries or some brokers won't allow certain countries to trade with them. Australia is one of them. Canadians, I think Americans too, can't trade with Australian brokers. So that's the thing. So what I say is, when you're learning, start with do some Google research. I provide you with a good broker, but I tend to like to pick a unregistered popular broker, and if you have people that you've looked on the internet and they're able to deposit and make withdrawals, then no problem. I rather deposit $100 into a non-registered broker, practice trading, make some profits, make some withdrawals. If there's no problems, then great. But once you become an expert trader and say you want to deposit $10,000 or $20,000, then yeah, sure, go to a registered broker. So that's all I wanted to say on that topic. So you can do your research on brokers. The main thing between registered and non-registered is about the leverage. How much money do you want to deposit? If you want to deposit a lower amount of money to trade, then you need high leverage. You need a high leverage broker. And the laws on how much the brokers can lend you it varies. So that's the major thing. Okay, so I hope you understood that. You can read this in detail on your own time, and let's go to the next term.